Just confirm if you can see the screen and also you can hear me. I think you should be able to do that now. Alright, cool. Okay. So, good morning to everyone. Happy new week. It's going to be an amazing week. Definitely gonna be an amazing week this week. You know the kind of feeling when you wake up in the morning, you've done your prayers, and you just know it's going to be an amazing week. So I'm extending the amazing week to everyone. It's going to be an amazing week for you. All right, and it's the second to last week of October. We just have one more week, and then October is done. It's amazing. Wow, it's amazing how the whole year is running away. We don't know where it's running to. It's running away. But like I said, it's going to be an amazing week for you and for everyone, right? But let's go on to the deal that we are here for. Let's close some applications. Okay. Alright. Yeah, we're ready. Now on Friday we did a review. I couldn't do anything on Saturday because I wasn't really strong. But I'm glad I'm much more stronger than ever now. I'm very strong now. At least for the first time in almost 3 weeks, 4 weeks, almost 4 weeks, 3 weeks plus. This weekend I was able to taste. You know that feeling when you taste food and then you can taste you know the taste. More, I couldn't taste anything for a long time, and also I could not hear properly. But so that one is settled now. So thank God for that. So last week Friday, that's 3 days ago, 2 days ago, 3 days ago, when we met, right? We did few analysis on all the pairs already. And I said we're just gonna revisit them on Monday today. Alright? Just gonna revisit them on Monday. So starting off with DXY, and I didn't even expect less from this guy. Why? Because I didn't expect less from it because already the whole drawn liquidity and everything is already suggesting to be bearish. Now normally now we don't know how DXY operates, but it can decide to take its own madness and then move again in another direction. But for now, we analyze on Friday, so that DXY is going to be bearish for now. So for now, I can see it categorically that DXY is bearish and it should continue that bearish move till further notice. But let's go on the chart. I'm trying to set up my router, that's why I'm coming. Alright, I've done that. Okay, I think it's done. So let's go on the chart. Let's see a few things. Let's see. So you can see now, as you can see on your screen, right? This is the 4-hour chart. And from the 4-hour chart, what can you notice? You see that we drew out a particular supply zone, and this supply zone, right, is as a result of I think 2 hours. So let's see 2 hours exactly. So I drew it because of this 2 hour here. In all these levels they are just rejection block, and I just follow them. So this is it. So price is responding off from that. You see, it's responding off from this zone itself. I just covered everything up to this level. When you look at it from the 4-hour time frame, you see it's like a flip zone or whatever they call it. And many people call it different names. So it's like a flip zone. It's a support level before, and now it has become a resistance. Alright. So that's where price is responding from on DXY, and I expect it to go ahead to come lower. You know why? Because of this gap. So if you look to the left here, there is a gap here. So this gap alone is like, we can see, is like a drawn liquidity for it, but it wants to rebalance it. You need to cover it. This is different from fair value, right? This is not fair value gap. This one is gap itself. Those market gap. due to probably market close, rollover, and all those things. And so the draw on liquidity for DXY, I've marked this swing low around 97.483. But first off, I'd like to see the daily time frame, because I remember seeing something in this daily time frame. Because you see this movement, this small pullback that we're seeing now, or the pullback we're seeing now, it might just be something from the daily time frame. You see what I'm saying now? So from the daily time frame, look at what we can see. Let me shrink the chart more for you so you can probably see. Let's open it. So from daily time frame, looking at it from here, right, this place is like an higher time frame, like I think weekly or monthly level. So if you see this, right, price mitigated the higher time frame key level, and the next thing it did was it led to a change of character. Okay, now after this change of character, right, what was the next thing that it did? It came back, mitigated these lows are here, but before doing that, it accumulated. Power of 3, right? Accumulated here. This is an accumulation, manipulation, distribution. So it came back. Let me just put it out first so you can see it. So it came back here, and all of this, and then before finally going upwards. And so it's clear that we can see this level is a break of structure. Alright, now what is it already giving you? You see there's a sweep here, and this is sweep of liquidity before the shift. There's a sweep again here, sweep of liquidity before the shift. So it's just giving the vibes that it wants to break forwards, that's upwards. Normally when you look at it from the longer time frame, which is a higher time frame, you know that okay, DXY truly should go up. Alright, so that's why I said this pullback, it's not something that is going to be long. In my own view, I don't expect it to be long. In fact, if I'm going to divide this by my dealing range, I'm only just expecting it to at least cover up that gap, probably come to this level like this, and then start going. Honestly speaking, this is what I'm expecting from it. And if I want to show you properly, let's open it to our dealing range. When I mean dealing range, I'm saying identifying our swing high and swing low. Okay, you see this level here to here, this is a swing low, this is a swing high. Price pulled back into 50% before moving, and now after this particular stuff that he did here, this sell side liquidity that he took out, and leading to a big shift of structure here. So this is like, we're going to call this one the market structure shift normally, right? MSS, call this one the market structure shift. So stay with me, this is the daily time frame now. Now when you have the market structure shift already, you know that we're only waiting for confirmation to say okay, this is now the trend. Alright, and then it did the confirmation by giving us a break of structure here. So this level here is a break of structure. Okay, now if you are going to use your dealing range now to mark this, okay, that is want to identify premium and discount. So look at this low to this high, right? As I'm marking now the swing low here to this swing high, is really inconsistent. Price didn't really pull back into the equilibrium there. Alright, meaning before the expansion, I'm talking about before the expansion also. Meaning to me, when I see a case like that, I'm saying okay, this is an incomplete market structure, meaning price is supposed to at least pull back again to correct that move. That's the way I see it. I just see it mathematically. Then we now have a new swing low here. Okay, we have a new swing low here. Now from this new swing low to the new swing high here, right, what can you see? You can see that price is really it has tapped into the equilibrium and even down inside the discounts, which is a good level to buy. So it's not even really just the premium and discount now that is the issue here. The main thing is they've been a market structure shift here, and there's a confirmation. You would always hear me say 2 week of structure tells you the trend. So in this case, we have it confirmed. So there's a structure shift and there's a confirmation of that structure shift. So from the daily time frame, we have what's it called now? We have a shift of structure. All right. Now to mark it out properly, then you now have another block here, which is the last sell candle here. Right. You have another block in this level. So this is the daily OB. and that's why you see that I drew that stuff down. So I'm only expecting price to not break here. Hopefully it doesn't break, but I'm expecting price to like come down and then start moving up. When we go lower, so maybe let's say we go to the 8 hours time frame now. So if you go to the 8 hour time frame, there's a reason why I came to 8 hours. It came to come to 8 hour time frame. You see that there's a gap here. That's that gap. Let me show you. I think we can delete this one now. Let me just delete this one. So you can see this gap here. So there's a gap in this level here. I'm just marking everything down here. So I'll just pick it out. Just pick it out. Alright. So this is where like I'll be expecting a major pullback, or if anything is going to happen. If anything wants to happen first, I'll say expect price to at least drop into this level before continuation then. But we are not market makers, neither are we what's it called now, predictors in the charts. We are only going to react to what price is doing. So just in case price now comes down to this level here, right, and then it just obliterates it, takes it off, and takes this low, that's a structural low now, it takes this low off and still takes this low off, then we can say, oh, there's now been a major shift of structure. Alright, we can then say, yeah, there's now a shift of structure. So but for now, what we have is DXY is supposed to be bearish before it continues in its bullish form. And the twin brother of this one now, which is Euro USD, will be doing the opposite of this. So if DXY is bearish, Euro USD is bullish. So let's see it and let's go on to Euro USD now. So Euro USD, I'm already bullish on it. I have a running position right now on it. Why? Because of, I think I taught this concept already before, the failed POI concept. I was on a sell before here, and so because it failed, the level that led to that place to not hold, just mark that same level and use it. It's called, you people use it a lot, it's the flip zone. So for Euro USD, just the same way I'm expecting DXY to go up, right? It's the same thing I have here. I'm expecting to go up, and this is where my target is, which is this high around 1.17798. Now it doesn't mean that prices cannot pull back and do whatever it wants to do. It can do whatever it wants to do, but so this is just me here. This is just me waiting for price to just move. And so if you look at it from the higher time frame here, let's say in 2 hour time frame, right, you can see that this is a structure shift here. This is a structure shift. And you talk about the market structure shift, that is it. And you stoop down to like the 1 hour, you see the confirmation of the structure shift here. So this is the confirmation of the structure shift bar, the break of structure. So market structure shift, then confirmation. And what is best? You can wait for liquidity. It's not all market price action that I wait for liquidity to be swept. A few scenarios I don't just wait for anything, I just enter. Alright, and this is one of those scenarios. So but if this fails, the buy, even if it fails, I will still look for more opportunities to buy, because for now there are not any bearish confirmation for Euro USD. So for Euro USD, this has become a new draw on liquidity. Let me mark out the most recent high, not the far off end. So I mark this level here. So I think this is 5.86. So this is like the most recent one, although I still expect that high to be taken out though. But I'll mark this level as our sell side, buy side liquidity. Yeah, so I'll mark that level as the buy side liquidity. So for Euro USD, I expect it to be bullish and to just continue going up for this week. So let's see how it goes. I've been holding the trade from on Friday, because I calculated, I was looking at it, I thought, okay, if I don't enter this trade now, by Monday it might not give me my own entry. Because of a swing, it's a swing trade. It's not the normal day trade I want to take, and that's why I entered the trade. But if the opportunities come, definitely we're going to take trades. We are drawing closely into the Q zones. So right, this is almost 7 o'clock, and then we'll start seeing some volatile movements. Alright, so to move on, so this is for areas by the way. So to move on, we have on gold. Eh? Okay, no, this is not good because I was surprised. Why am I surprised? Because for gold, I know I'm waiting to buy and seeing it move like that, crazy. So for GBP USD, right? The same thing. Last week we saw a structure shift here, and I said that we're going to be waiting for a sell around that these all these rejection blocks here, but it didn't work. It didn't work out, and so I just used it as a flip zone. Same Friday night execution, so I used it as a flip zone. This is why I bought. So because of the market structure shift that happened here, you can see the structure shift occurring here, right? The only thing I needed was a confirmation of the structure shift, which happened here. So there was already two break of structures here. I just knew, okay, the structure has shifted to be bullish. And then this one has liquidity. Let me show you. So this is the last break of structure. Then you want to mark the origin of the break of structure. So you can mark here as the origin of the break of structure, but this is the origin of the break of structure, but this becomes inducement. And so problem is, I would have had a very tight stop loss, but I saw this POI, and it's not me that I'm not the one that want to submit myself for confusion. So I just marked the whole level. If not, I'd just mark it from here. But you see me, I'm not really that patient with the stop loss. So I'll mark it from here and then move on and have maybe a tighter stop loss. But no, I just marked the whole level and it's just 3 hours. It would have given me maybe like 5 hours, but regardless, that's the reason. So it's a structure and liquidity move on GBP USD with this level as an inducement, and then so that's just it for GBP USD. So I'm holding the trade right now. Now hopefully there's a pullback because of this stuff. You can see that there's a sweep of liquidity, and you already know what that means now, right? You can use it as a QMR, which is you can wait for price to like come back, make a shift, because this is a sweep of liquidity. Let price make a shift. Let me show you where price will make a shift now. You go down to the 15 minutes, 5 minutes. There's a shift already that has occurred. Let me delete this. No need of deleting it. I'll just change the visibility. So take it away from the minute time frame first. So you can see there's already a shift already in the minute time frame here. So just in case you miss this buy, there's a buy here that was missed already. It dropped down to 5 minutes so that you're able to see it properly. This one, okay. So you see it, right? So there's a shift already here. The shift has occurred already, alright? And the pullback also has occurred. Now this is an abnormal shift. It was when I used to use 15%, 50%. So go on 15 minutes time frame. You can clearly see the shift very well. So it's even giving the vibes that it might still pull back, because look at this. There's a fair value here. There's a fair value here. So just in case that during the week price pulls back and then gives us another confirmation by pulling back again, right? We would enter, because there's a fair value gap here, and this fair value gap it just aligns with the inducement here. Alright, it aligns so much with the inducement, so you can expect something like this to happen, like a pull and then a continuation. Okay, so for those of us that have already missed the trade, don't panic, don't worry. I've just given you one of the ways we can buy again. Alright, so that's for GBP USD. Then for gold, oh beautiful, thank you very much for pulling back. So gold last week here, this is what I was expecting. If you look at it, I told you that I don't really know how to trade all-time highs. No, the only one, my own strength, is if you even look at most of my entries, you'd have learned that by now, that most of my entries are usually associated with extreme pullbacks, which is I prefer taking price when it's probably at discount or at premium at an extreme level. So I know it's to chase price. I don't chase price at all. And if you look at the only position that we had on gold, The first one was here, and you can see the extreme pullback. You can see how price pulled back before buying. Now price did the same thing here. So just that in this case, it looks like a shift because price is supposed to respect this OB in 4 hours. This is a OB in 4 hours, but all this movement, it means something. But let me show you. And you stoop down to the 2 hour time frame, right? Look at it. So all of these levels, they still mean something. So what price did was it came back, it came lower rather, and then mitigated this OB here in 2 hours, or you want to call it a rejection block. So I'm going to delete this. So it mitigated it here. So you can see the mitigation here, right? Price mitigated it here, and the next thing I was waiting for is a shift. So let's go to 5 minutes and see what I'm talking about. Now in the minute time frame, so you can see I already marked everything. Now in the minute, this is it here, this is the mitigation here, and so in the minute time frame you can see that the first position we missed it. This one is the first position because this is a shift. I taught you displacement type 1, so this is type 1. The shift has occurred already. This is normal level. So okay, before price moved, it pulled back a little and then still did this and then pulled back. So that's giving its own type 1 stuff. Alright, so expected to continue buying from where we are right now. That's what I'm expecting. Alright, so since I've already and why did I miss this one? Because obviously it was in the midnight and this is what we used to say. People don't usually sleep anymore. You're trading Asian session because this is obviously the Asian session. This is today in the midnight around look at the time there, 1:10 a.m. and now this is 6:55. If you look at your time now, you see 6:57. So that's this present time. So let's see if we were to enter right now. Let's see where we're going to. Let's see the reward and everything. Okay. Well, before we just jump in, let's also check every other thing has been mitigated. This OB has been mitigated here. I can see this thing. I don't know what it is. Let me check in 30 minutes. We know the jump enter trade. This is another OB here. Price has just mitigated it. So if I want to enter from here, give me stop loss first. Let's check if it's worth it. If it's not worth it, we're not going in. This is not worth it though. Why is not worth it? Because I know my stop loss is supposed to cover this whole level. And I don't know. My stop loss is, my TP is supposed to be at the high here. This is the reason why I don't like missing trades and the right entries. Honestly speaking, so this is 2.41. okay, well, if you look at it, let's see one more time frame, 1 hour, if there are any possibilities of it coming down lower. Not really. Not really. So I'm going to check if this is going to be okay. At least it's up to 2 hours. It's more than 2 hours. It's like 2.57. Okay, so at least up to 2.57. But first off, I want to check if it's okay for me to enter in my own personal account and also my prop account. Then I'll tell you if you can enter. Some people use, you cannot trade good with this kind of stop loss. Do you know the kind of stop loss that is here? It's long go, so it's not that you just jump in. Don't try to. Let me check it myself. I want to be the scapegoat. 1 hour. Dear Lord Jesus, hold on. I'm seeing this thing as if it's going to still pull back deeper. Honestly speaking, no, we cannot even, don't even try. We cannot, if we cannot take it straight. I'm seeing something else, and this is because I open my phone. If I'm not seeing if I didn't open my phone, I won't see this. I can see this also here. So there's a sweep of liquidity here. I know that there's a shift and all that, right? But this sweep of liquidity alone is telling me something, and so I'm going to go higher from here. Exactly. So here is where I'm going to be waiting for price to really pump back to. Okay. Yes. It's much more better, and I think that's what 15 minutes was showing me, but I didn't want to look at it. In my mind, something just ringing in my head that after all this analysis, the trade will go stop loss, go still chop stop loss. Just do the analysis and just let peace be. So that rejection block I'm seeing in the higher time frame, this is it here. This is the OB or mitigated in the minute time frame, 15 minutes. Now this one gives us a better risk to reward. Okay, yeah. So this is one that I'll be willing to take. Let me just put in the alert system so that as we're analyzing, maybe it gets there before we end the session. We can now take the trade together. So I've put the alert there, and this one should be more than 5 already, but I'm just going to do only 5. Nothing concerning what I want to do. So we can see I've set the alert, set the message also by XAU USD. Save it. So price is coming already. When it enters that entry, the moment it comes into that entry, I am going to be taking a buy there. Alright, so we have our trade. We have a trade already on gold. For those of you that trade gold, that's my bias. I want to buy. Alright, so let's move on to the next one. Okay, so the next one now should be NZD-USD. Now I gave a buy on this one since last week. As I give a buy here it's on Friday now. I think it's on Friday. Yeah, on Friday. So I'm still holding the buy on this though, and so there won't be much analysis here. As by the way, the only thing that is here is you can see a shift of structure. 2 breaker structures is what I used to say you need to tell your trend. So you see the first one there, you see the second breaker structure here, right? And so I just saw this level as a gap. Let me break it down. So that stuff, when I told you that the kind of breaker structure will determine if price will sweep liquidity or not, that's what happened here. So I saw this as a gap after the breaker structure, so I only knew, okay, price does not really need to sweep liquidity. You only need this cover that gap. So that's why I decided that, okay, I was going to buy from here, alright, to this high. So that's why I'm on NZD-USD, presently running well, fine, and I expect it to continue going up. But we know market, this is already more than 3 hours. So maybe you took the buy, you know it's already time to set your stop loss to your entries, because price has gone more than 3 hours already. Okay, I have that rule. It's one of the rules I used to use to protect my own self. Once it's more than 3 hours, that's my break even. Anything that makes it reverse back to entry, most of the time that trade is not going to hold. Okay, it's not going to hold. So this is AUD-USD now. AUD-USD, we had a buy on AUD-USD last week, Friday. Yes, on Friday we had a buy. The trade hit stop loss. I don't know. Yeah, it hit stop loss. I remember. Hey, look at it here now. The trade hit stop loss, and then immediately after hitting stop loss, the market uses a sacrifice here. This is the drop. After market uses a sacrifice here, it reversed immediately. So you just see where person where they trade structure and liquidity, it still end up to be liquidity, and that's what the market did. It never can be right. You know, you cannot fight the market. The market will do what it wants to do. So it's a buy on AUD-USD. Let me see if there are further opportunities to buy from. I don't want to just come to this lower time frame because I don't like it. So from 15 minutes, right, you can see this shift already. So there's a sweep here, there's a shift here, okay, and there's a confirmation here. So everything is confirmed, everything there, right? This OB, I'm seeing it like unmitigated, it has not been mitigated, right? And then there's like an inducement here. So just in case price like wants to like pull back, and if there's any major pullback on ADUSD, right, I would be suggesting that we can start looking for buying opportunities below this zone. Alright, below this zone. So when price comes into this level, then you can start looking for buying opportunities. Let's see what that level will be in the higher time frame. Yeah, so it's around the 2-hour OB, which is this level here. The 2-hour order block has become our new POI, where we're waiting for anything at all and the displacement, then we'll buy from there. Alright, so that's for AUD/USD. Then for USD card, now I don't know, I dropped the trade on Friday. So if you didn't take it, I dropped the trade, and not just the trade, I gave an instruction on Friday that if you are trading USD card, I was already on too many positions, there's no way for me to take it. You can buy, I say you can buy, sell USD card, because I dropped the trade on accumulation, manipulation, and distribution. That's power of 3. I told you that price was what doing what here. You can see it clearly, right? The price was just accumulating. I told you that the best thing I'm expecting is a manipulation, and you see the manipulation there. Price. So let me show you. And so this is 2 hours time frame already. Sorry. Let's see 1 hour. So you see the accumulation here, right? After the accumulation, what the price do immediately? It did what? Manipulation. And after the manipulation, what did it do? It distributed. And the distribution is this. And most of the time, when you have a distribution, or when you want to have a distribution, you will see that pullback. It must always occur. Usually it will occur. Alright, so if you have an accumulation like this, like this, and then suddenly you have a manipulation like this, and price quickly come back. Manipulation, obviously you see that as a sweep of liquidity, and then it comes back, right? This coming back itself is going to cause a shift, meaning either break the previous low or do a type 2 displacement, and so it will just continue downwards. Right? If you've not seen the trade is on my wall on X. You should check it. So that's what price did here, and then when it was coming down, this is the shift occurring in the real life data here. So you see how price just took this out, returned back, and then just gave beautiful entry. I think it was this 1 hour stuff. You gave it clean here after the shift here. So if you took the trade, or you take the information I told you to do, then you should have taken the sell here. And the sell is one that is long, though, by the way. It's one that I see that is long, that I can hold, because I'm going to hold it to this low here. Alright, so hold to this low here. This swing low here in the 1 hour time frame. So, but if you didn't take the trade, not to worry yourself now. We'll find entries as the week go on. We're going to get more entries. So that's for USD card, by the way. For USD card. So moving on, the next one we have is USD CHF. So USDs are supposed to sell, but let's not just go with supposed to and go with technicalities. So from technical analysis here, you have a break of structure here. So using this level like as a mitigation block, you can use this whole level here now. So we're looking at this level now as a mitigation block. Okay, once it as a mitigation block, so we want to see, okay, as price pulled into, so let's define our dealing range first. So there's a swing high here, there's a swing low here, so make sure that it's correct. So you can see that price is already at premium, which is at the discount, sorry, at a premium level above equilibrium, and so I can delete this one now. I'm just taking you through the process of the way I take my trades. So I know I know I'm not supposed to. Some of you will just learn my full strategy once, but I'm not scared. If you learn my strategy, it's not a bad thing. It's a good thing. So there's also another, sorry, Shiza. There is a fair value gap here. You can see the fair value in 2 hours here, right? I usually like covering the full second candle. Also, if you don't know how to trade the fair value gap, you should go and watch the, I dropped the trade and I also made a video, so just watch it, okay? So that's the fair value gap. I don't know if it's going to get there, by the way. I don't really know, but what I know is mitigation has already occurred in this mitigation block here. See, even the name says mitigation occurred in mitigation block. So the only thing that will be left is, okay, as is there a shift in structure? So let's check. I don't think so. The way I'm seeing it, I don't think so. I think it has. So this is it here, okay? So first one mitigated, boom, it came down. I like when I see scenarios that fail. Most of the time, it's like people that are teaching, mentors that are teaching, they don't really show you situations where these things fail. I like seeing situations that actually fail, so that you can tell you that, oh, these things, they are not really 100%. There's nothing like an holy grail. You understand, right? Now, see, as far as mitigated this level here, but what did you see that happened next? It led to a shift of structure here. But as at this time, the draw on liquidity was crazy, and then price still pushed back up. So even if we like took our sell when price came back up, maybe to this level like this, so you took a sell from here, you hit a stop loss. And I'm very certain that you've had situations like this whereby you see something like this happen, okay? But do you know what can save you? Time. The timing. I dropped something last week. I don't know, God give me the grace to drop them again this week. I dropped it last week, and I said, see, most of the time you use this ICT setup, ICT stuff, ICT that, ICT this. Amazing, it's an amazing concept, but even ICT himself, when he teaches it, he says you should use it in line with Q zones. Alright? You're supposed to use it in line with Q zones. Now, if you look at the Q zones, we're talking about London session and New York session. The Q zones now, I should translate it in Nigerian time. 7 a.m. like this. I say when there's no daylight saving. So 7 a.m. like this, is your Q zone. That's the London session. And then for New York session is around 2 p.m. Because of daylight, maybe no daylight, So when New York opens to. So if you look at this now, what time did this shift occur? Let's check it. This is on Friday by 21:55 midnight, meaning entry that was given on this trade was around, because this is type 1 or type 2? Type 1. So if I want to use a Fibonacci entry here, I enter on 23.6 here. So entry would have been around, look at the time, 22:30. And what time is that? That's already night. So if you enter based on time and price here, you already saved from the shenanigans here. Alright, now that price mitigated it again, and now we are now trading in the Q zone. This is a shift of structure already here. I'm not going to chase price, no, I'm not. Now there's already a sweep of liquidity. Price just did this, but if I'm going to treat this the way I want to, okay, this is where I want to sell from. Anything the price wants to do now, whether he wants to fake out, I don't care. I don't really care. This is where I want to sell from, meaning here should be my inducement. This is type 1. So just in case this level fails, then we will now move on to the second level above. I know that this target is going to be too much, that I will have to extend my stop loss. I don't know how to do tight stop loss. It's not my. What is this? 12 hour. No problem now. It's not like 12 hour. 12 hour is not bad now. I will reduce it to 5 hour now. There's no wahala. Exactly. Okay, it's okay like this. Hey, let's be in 6. I'll leave it like this. Exactly. So I have a trade that I've been waiting for, and I've placed the limit order already. I've placed the alert. Sell USD CHF. Okay? Because I'm using type 2 displacement. If I want to chase price now, I'll just say, oh, price is moving. Let me just jump in. You just jump in like this, bar, and then bar, price will jump you out, boost, and everywhere don't scatter. Alright? So, but this is where I'm going to enter. I expect price to like pull back up before entry. Now, one thing you'd have, for those of you that have been watching me for long, right? You know me for that one. You see, precision in entry, I love it than anything. I want my entry should be as accurate as anything. I don't want to enter the market because I feel like, or because the market is moving, or there's volatility in the market. I don't really care. Just give me my own entries, my own entry that I need. That's all. Alright. So for USD CHF, that's what I expect. A sell continuation to the downside. So if it happens, that price gives us our entry around 0.79386. We're going to take the sell and then sell it downwards. Okay. Oh boy, the next one is USD JPY. Now for USD JPY, let's see. Already, this one is a known fact. Price is supposed to, man, they pay me. I think I slept on my hand. So USD JPY price is supposed to trade into this gap, deeply into the gap. It's the only one that is proving strong head. Never trade inside the gap. And I expect it to do so. Okay, the price is supposed to trade into the gap. Now, from 2 hours time frame, I like using 2 hours to check something out. You see, there's this break of structure here, 1. This break of structure here, 2. So the trade is now bearish. All right. Now let's go ahead. Let's go back again. No, there's no need to go back. Let's just stay here. Let me just stay here. Let's drag a bearish trend line to see something. So, bam. Can you see something? That price has retested the bearish trend line. Alright? So, next thing I want to mark out is.
Not sure what I can't hear you anymore.
You can't hear me. I can hear you. Cletus, I can hear you speaking. Maybe it's your network. It should be your network. Maybe you should join and leave again. If you cannot hear me, join and leave again.
I can't hear you.
Christmas. If Christmas wants to speak. Christmas, can you hear me? Can anyone else hear me before I proceed?
Yeah, we can hear you.
Alright, so people can hear me. So Cletus, I think you should leave again. Probably put your phone on airplane mode and come back. You'll be able to hear. So to proceed, right? Hey, I don't go do rubbish. I'm coming. So I can see now that price has what's it called now, retested the bearish trend line there, right? Next thing that comes into my mind is mitigation of POI and displacement. That's all. Because once price moves away from a particular place, I want to trade it to another place. So, IRL, ERL. But that's a story for another day. So let me just show you what I mean. So this is 4 hour OB here, right? So to me, I'm just telling you now that if price breaks away from this bearish line, then it's no longer going to be bearish. Price will just want to go and sweep all the liquidity above. Alright, so I'm going to deal with what we have on our screens. There's a fair value gap here and there's an order block. Now TechCrease, I watched one of TechCrease video. So I think I watched one of TechCrease video a long time ago, which is, when I mean a long time ago, I'm talking about 2 years ago, maybe a year ago. I can't remember now, but it's been a long time, right? and in that video he was explaining what makes another block valid, or maybe a setup you want to use. Now he said in presence of a fair value gap, the presence of an OB, but most importantly the presence of a breaker structure, and everything we have it here. If you come down to 2 hours, don't forget that's the 4-hour OB I just marked. This is a breaker structure, right? The other block has a fair value gap, and there's been a mitigation. So if you come down to like the lower time frame, let's go to 5 minutes, right? You'd see already. I know that that's the bearish engulfing candle already. I know that is the bearish engulfing. So if you see this is a mitigation now, and the only thing that we're waiting for, this is a mitigation here. Price has mitigated here, okay, and so we're waiting for what displacement. It has occurred. This is the displacement here. It happened around 4:45 a.m. this morning. Now the way I would enter this is I'm going to use type okay, no, 50%. Yes, I used to enter most of the time with this mathematically, alright, and so my own entry is going to be at 50% here. Don't give me wrong 50% to not a miss this trade ahead. So my own entry is going to be here, so I'm going to delete the gun box and this also, okay, and put my position to there. Stop loss slightly above the low. Let's see the reward. If the target is more than 5 hours, I will extend my stop loss. I'm not crazy, I'm not stupid. I'm just someone that likes risk management, so anything the market wants to do, I will extend my stop loss, no problem. So yeah, let's see. Okay, 5 hours. This one makes sense. This is better because the stop loss is at least above with many pips is enough. Alright, so I have a trade again that I'll be waiting for on USJPY. I want to set the alert so that I don't forget. This subscription will soon expire. It's not easy to be subscribing every month. What do you want to do? And me, I don't really need this thing. I don't really need this trading views of subscription. I don't need it. Honestly speaking, is because of people that I'm teaching here. That is you guys. When I'm using a replay tool most of the time, that's why. Because I can easily set limit orders. But it's you people. You are the ones that allow me subscribe. Somebody said the other day, somebody said, most people that do live stream, they do it because there's something that they get. There's nothing I'm getting. Nothing. In fact, I've spent too much money in this thing. But what to do now? I'm doing it for the community. So I know I was seeing a bearish engulfing candle here. I just needed to confirm it in one of the time frame, and I'm not seeing the time frame to confirm it now. I'm not seeing it, so I can't force it. I've checked 1 hour, I don't see. I checked 2 hours, I don't see. I checked 3 hours, I don't see. So no need to force it. But this is one of the bearish reversal candlestick, which is what they call the hammer. Is it not hammer? In my book, here's the hammer. So price should just pull up and then tap into it, and to be a good position to take a sell from. Alright, so we have a trade again on USD-JPY, a pending order on USD-JPY. Alright, and you see it coincides with DXY itself. So next on the list is GBP-JPY. Alright, let's zoom out. Let's see what this guy has for us. Let's zoom out and see what he has for us. Okay, looking at it, I can see that it's bearish, and another thing is I expect price to like pull deep into that gap. Now I know that price is already going, but we don't chase price. In fact, I will just position ourselves and then just hop in. Okay, that will not be the issue. So let's see something. From the 2 hour time frame, let's stay here. Price is already going bearish. So if you drag this out, you see that's a bearish line to establish the sell trend there. Price has mitigated the POI here also from the 2 hour OB here. There's been a displacement also in 5 minutes. Yes, and no, I've not missed any entry. So there's been a displacement also. So let's see how we're going to jump in this trade. I can already see that the displacement is type 1, which is abnormal shift. Abnormal shift. So this one I have to use 50%. This is where the shift is also. Normally this is supposed to be the sweep, this is supposed to be the displacement itself. For those ones that are hearing displacement and you might not understand what displacement is, ICT has taught displacement. In fact, it's the first person I heard it from. So when he was teaching it, he say one is displacement high, displacement low, and then the middle is where you get your entries, and then many of us now, we just fine-tuned it to the way we trade it. Okay, so this is your displacement high normally, and then the displacement low is the level where price starts pulling back from. But this is what I do. So I mark it like this from the high down to the level that was displaced. 50% is going to be my entry because this is abnormal. Why do I call it abnormal? Why do I term it as abnormal? Because of the type of sweep. Let me just show you once and for all, because I said I was going to make a trade on it. Okay, so this is something I want you to see, right? And price breaks so far like this, okay, and then shifts like this. Now emphasis on the sweep. You see the break, this sweep and the shift. Is it short or long? You can see how long it is. When it's long, I just term it as what, abnormal, and then I use 50% most of the time for that kind of entry, okay, because it's abnormal. Then let me show you the one that is normal. So when you now have a case like this, and so maybe I'm using the same scenario here, but you now have a case like this, right? And then price stops down like this. Now is this one the same thing with this one? Obviously no. Why? Because this is now normal, so the sweep is not too long. I don't need to use 50% of the Fibonacci or the Gann box. I just use 23.6 on the Fibonacci, and then I take my entries. You see the trades of last week, most of those AUD trades that we took, they were all, the majority of them were used the Fibonacci level 23.6%. I tell you, I prefer using the mathematical approach, which is using that Fibonacci than just the PDRA. Yeah, because sometimes I might use the PDRA and when I end up missing some trades when I use the PDRA. So that's the thing. These are the things that many people will not tell you, but you're welcome. I'm not, why I'm not really scared of sharing it is because the truth is not everybody that hears them and practice them. Even if Dax come online and then he teaches his strategy for free and the exact way he takes a trade and everything, right? It's not everybody that will be profitable with it. Even if his tech crews wake up tomorrow now and say, today I want to teach my strategy for free, it's not everybody that will use it and be and be profitable. You know why? Because not everyone practice. Most people will just sit and they'll be like, okay, I'm not so it be, they just jump in and start using it. No practice. They won't check it if the things are so. Alright? They don't, and that's not good. So let's see. I've set the alert already for this guy. Let me first of all see first here. Let's check the reward. If it's more than 5, you know what we're gonna do. I'm gonna extend the stop loss. So way down. Hey, Jesus. Okay, let's see. Way down to the ERL. ERL is called the external range liquidity. IRL is called the internal range liquidity. Internal range liquidities are referred to those POIs like your fair value gap or other blocks. Alright. So we have a pending trade also on GBP/JPY. Alright, I can see that price is moving, but don't panic. Don't panic. It's meant to do so. Okay, don't rush. This is where you have FOMO. Don't FOMO. No go FOMO this week. Go follow your plan. Oh. If you not follow your plan will follow you. Don't worry. Your body go tell you it's no good. Okay, so for this is GBP right? I expect price to extend deeper, and so we have positioned ourselves rightly, and let's see how this goes. Okay, so our entry is at 202.772. All right. So moving on to the next, we have GBPCAD. Oh boy. Some pairs, I'll just look at it and I'm just, what the heck is this guy doing? I don't know what he's doing. One funny thing is, and I don't try to mask it. Once I don't know what he's doing, I don't know. I'll just look at it. I don't know what this guy is doing. But looking at it, right? Oh, this is 2 hours. Now why? This is why I don't know what he's doing. And hey, now I know what he's doing. So from 4 hours, I can see what he's doing now. So the 4 hours, right? I can see that there's a sweep of liquidity here. Alright, this liquidity led to this break of structure. So I'll take reading this. So break of structure here. Now, what is after the break of structure? What can you see that has not been mitigated? A fair value gap. So you have a fair value gap here. Alright. Now this fair value gap is one that I think is going to mitigate it. You know why? Because for every move here, this is a swing low. Before the shift, before price was bearish, let me just extend to the left side. Before price was coming bearish, before it moved to be bullish. All right. So for every move, okay, I think I explained this, but maybe I didn't explain it deeply the last time. Now, before this shift, right? This is a shift. You would not know that it's going to be a shift, but this is something. I think I've explained it to those ones that were in my mentorship. I'm not doing anything like mentorship again. For those ones that were there, I've said this thing before. Let me just reiterate on it. When you have an unequal price movement, unequal means okay, price did not come to equilibrium and it didn't also pull more than the equilibrium, right? Most of the time, that low or the high that price, that price forms will end up being liquidity. Maybe this will be one of the sessions I will take on Saturdays. Alright, so in this case, this is swing high, this is swing low, this is the swing high here, this is the swing low down. So price did not pull into 50%, neither did it come into equilibrium. And so what do you see? Price ends up being what? Liquidity, so that it can balance that price movement. It's just mathematics. In economics we call it ceteris paribus, all things being equal. So this is another low, right? Now this low, you take it to the high here where price is pulling back. You can see that the POI now that we've marked rightly falls in the equilibrium, which is where the POI is, right? And so let's delete it now. You go to the 4 hours back, you can see that level is also associated with the fair value gap that is here. And remember, I always tell you, when I'm marking my fair value gap, I know you're supposed to mark the middle, which is just like this. And the problem with this is, a lot of traders, this is the mistake that you do. You mark your fair value gap like this, which is correct, very correct. And this is the problem that I have with you. So you take a trade like this, your stop loss is just like this. And it shouldn't be so. You know why? Because the fair value gap is only, how would I put it now? It's just like a place that we're waiting and watching what price wants to do there. So there are cases whereby price is going to pull down more than that high that you see there, but it won't cover this low. It won't cover the second candle, but low. No, it will pull down and then immediately reverse back. Now, this movement that I left behind here is not a body candle, no, but instead a wick. In most of the time, check your chart. I'm not even saying this one, just go and check your chart. Most of the time, you will see it as a wick. Why? Why is it going to be a wick? Then you now see the body starts from somewhere like this and then start moving up. Why is it a wick? Because it just induced people out too. Because they, the way the price is moving, so a lot of persons are putting their stop loss slightly below this level because they feel like, oh, fair value gap now. You mark the first candle high, the second, the third candle low. You mark it like that. No, That's why I don't do that, right? So if I want to take a trade, most of the time you see me taking a trade using fair value gap. I'll tell you I'm marking the full second candle. So you see that full second candle, I'll completely mark it. Then two ways I might enter. It's either I'm going to wait for price to mitigate it, the fair value gap, then I go and look for displacement. Or I don't have that time, I know I'm going to be busy throughout that week, I'll just enter using consequent encroachment. Consequent encroachment means the middle, alright? So for those ones I don't know, so the middle, I just enter using the middle of that, the whole thing, and then I'll just set my target like that. Are you getting it now? That's just all. That's just all. So I've seen a lot of persons use fair value gap in different ways and all that, but that's the way I use my own. Right? You would never hear me bash anybody's system and the way they trade. No, I'm only trying to make a correction, the best way I can. The best way I can. Do you understand? So I think you understand that already. I think you understand that. Alright? So let's proceed. So for GBP CAD, I'll be expecting price to dump like into the fair value gap that we have in 4 hours, and then we're going to be looking forward to buy. Alright, so I might forget this one, so I'm just going to place an alert on it. So before Wednesday we should have a move on it. And most of the USD pairs, okay, well, we've taken that one though. So this is GBP CHF. This is basically, looking at this, we already know that it's bearish. No two ways around it. So you see that it's bearish. Price is even at a key level. So there's a break of structure here, but all this will not concern us. I've taught you how to enter something like this. You don't mark the main level like this. You mark the last level, which is this one here. So if you mark the last level, alright, save journey. So if you mark the last level like this, this is where your concern is. I think this is what they now teach as key levels. It's hard for me to keep up with these names, right? Honestly speaking, it's hard. So but I want to check something first, if it's valid for me to enter. Okay, so I have to check using my dealing range. I know it's bearish, so is it in equilibrium? Oh damn it, yes, it's at equilibrium, but there are POIs that are also usable just at the premium level. Okay, so this is what we're going to do. Now that price is rejecting off from the equilibrium, our job is just to wait. If there's going to be a displacement, the displacement has not occurred yet. Okay, yeah, I know displacement has not occurred. Looking at price, I knew it has not occurred. So this is it. So if price is going to come down here and take out this low, then a displacement will occur. Then we're going to take a sell. The sell is going to be a very tiny one. We're going to take a sell above this high. Alright, so again I repeat, if a displacement is going to occur, it has to take out this low, and then we'll have to now take a sell. If this happens, then we'll take a sell above this high to the downside. Alright, is that understood? I think it's understood. It's easy to understand now. So that's for GBP CHF. But if this does not occur and this does not happen, right, we're going to see price pull into the fair value gap in the 4 hours, which is this one, and before we now see a proper displacement to the downside. Alright, so take note of it. Take note. So that's GBP CHF. So the next one we have is on GBP AUD. We bought GBP AUD last week, right? And I hope you guys bought, because we bought the trade together on live like this, on the live session. So I hope you took advantage of that. So let's look at it in a moment. What is it doing? Oh, it looks like it's pulling back. Yeah, it's pulling back. It's correcting the trend itself. But I don't like this type. I'm going to delete this one now. We don't need it again. The trade already passed, so we don't need it again. Now I don't really like this kind of pullback because it's not complete. This low is the one in 4 hours. This is the low in 4 hours. Alright, the low in 4 hours. There are POIs below it. So if I'm going to define my daily range like this is the last low. You see that anything I want to do, okay, price has already mitigated at the equilibrium, by the way, but I want to check if there are POIs situating just below that level, and they are. Number one is I can see a fair value gap here, unmitigated, just waiting for mitigation. I think I should even check 5 hours. I just wanted to. I know there's something here that I was missing. So there is also a gap here. This is the 5 hour time frame. If you check the 4 hours also, let's say it coincides with this. So the 4 hour time frame also, there is a fair value gap. You know me, I'll cover the second candle. So first thing first, very important. So best case scenario, I'll tell us that we're going to buy when price mitigates this fair value gap on the 4 hour time frame. Alright, so we have our POI and we have the level we're waiting for price. The only thing we're waiting for is what? Mitigation. So the trend is identified as bullish, and so we want to trade the continuation. Alright, so that's on GBP AUD. So the next one we have on our list is going to be Euro JPY. Euro JPY is bearish, by the way. Euro JPY is bearish. Okay, it's bearish. So let's go. So if we look at this, the last break of structure from the 4 hour time frame is here. Okay, and this already looks like a sweep of liquidity. The reason why I love using the hour time frame, like 4 hours, is I can just see everything that the lower time frame wants to do, but I can see them once and fast. So there's a sweep of liquidity here. This is already like a Quasimodo, which is I've missed the Quasimodo here already. This is supposed to be the Quasimodo. If I go to lower time from now, I'll see it as a Quasimodo here. Okay, this one here. But that's nothing to worry about that, because when you go down to the 2 hour time frame, mark the OB. So you mark the other block here. You can see that this is the other block. Price has mitigated it, right? Your own job is not to chase price. Your own job is to situate yourself present properly to take a sell now. So we've identified the trend by bearish. We've marked POI. Price has mitigated it. We're not online when it mitigated it. So what should we do? Find an entry. So an entry point that we would use in this scenario is this. So this is where price mitigated it. Okay, here. And then where you're going to wait for displacement, or entry rather. This is the displacement. So I ask you guys, to everyone listening to me, if you don't get this, if there's a way to throw slap, I'll throw slap, give everybody. So is this an abnormal displacement or a normal displacement? I know I cannot hear everybody's answer. So anyway, you're typing the answer, type the answer in anywhere, but in 1 minute do that. Alright, I think you've done that already. So this is not a normal displacement, this is an abnormal displacement, and so we're going to be using 50%. Why? Because of the type of displacement. So you can see it here. Let me show you what I mean again, explain it again. You see, this is the break, this is the level that went into mitigation of the POI, but this is the low that needed to be displaced. So you can see how far it is. It's too far, so I call it abnormal. Instead of me to find one name and give it, I just call it abnormal. So when I'm looking for an entry, I will enter using 50% of that whole range. Alright, so now that that is settled, let's check and place our entry on Euro JPY. The alert has been set. Okay, come out. Sell here. So the entry is at 176100. Okay, 176100. When price comes into it, we're going to take a sell from there. So what's the next thing for us to do is to check for why is this writing sorry, I don't know what this is. The next thing is to set this, check the reward. the reward is very important, and the stop loss level, because it will determine if I'm going to extend or not extend. Oh, 3.7. This one is beautiful. No wala. So this one is supposed to be like this, 4.37. I'm going to adjust it to just give me just 4 hour. Alright, I'm not in competition with anybody, and so that's why I do my thing this way. So 4 hour, if it gives us entry, we're going to just take 4 hour and we're going to just get out. Alright, so 4 hours. Yeah. So if you are taking a sell like this, right, you can take a sell at 176.093. Okay, so if you are taking note of that, do well to take note of it now. So do well to take note of it now. The next one on our list is what? Let's see. The next one on our list is Euro AUD. This one is buying now. We bought last week. So Euro AUD is buying, but I need it to sweep liquidity first. So let's check the lower time frame to see if there are places to do one or two things. Then we bought using 2 times last week, so let's check 2 hours first to explain the POI that I marked there for you. So using normal structure and liquidity, let's identify the last break of structure. So you see the last break of structure is here. This is the last break of structure here, right? And so this is the inducement, and this is the POI. Alright, so I'm going to delete this position 2. We don't need it again. We're done with the trade now, so we're done with them already. So this is the trade, this is the trade. Yeah, this is the trade. So I'll be expecting price like come into this level. I don't know why I marked this whole POI though. Okay, it's 4 hour order block, so I'll be expecting price like pull into the level, into this POI, which is the other block, and then expect a shift of the structure, and then take a buy from there. Alright, so shift structure and then take a buy from there. Okay, so simple stuff, but not so simple. Alright, that's Euro AUD. The next one is NZDJPY. I think this one I already placed the sell limit order here. The reason why I did that is because price has already mitigated the hour time frame POI. So look at it from 4 hours. You can see that that's the 4 hour OB. Alright, when you stoop down to like 2 hours, what can you see? You should be able to see the other block very well. But look at it, just look to your left, you can see a sweep of liquidity here. Now if I were online by this time, what time was this? It was midnight, around 2 a.m. I was fast asleep. I have taken this here because of this sweep of liquidity, but not to worry, because after mitigation of the POI here, if you come down to lower time frame, maybe let's say 5 minutes, so you see the 5 minute time frame, right? Price has displaced already, so I only need price to come into my POI, my entry at 86.600 before I take a sell. Now you already know why I'm putting my entry there, because this is the 50% of the range here. So this high and this low, the 50% of it. Okay, so that's for NZD/JPY, for those of you trading NZD/JPY. Again, you know I don't trade all of all these pairs at the same time. You know that I take the ones I want to take, and so you should take the ones you want to take. Okay, you take the ones you want to take. The ones I really like, I'll be like, oh, I love this one, so I'm taking it. My own job is to just be ready to take them. Okay, now this is Euro GBP. Now Euro GBP is just misbehaving. No, it's just misbehaving. I think it's even ranging. Some people, I think I saw one funny question one day. Someone is like, the people that trade the Euro GBP, they are not normal people. Because how do you trade two crazy pairs at the same time? Quoted and then the base at the same time. It's crazy, honestly speaking. But if you check it, we're not really normal, sha. So this is what it's doing, by the way. It's ranging. It's ranging. So what we'll do is sell at resistance, buy at support. No, just waste your time. No waste your time at all. As price come resistance, sell out. Are you seeing it now? So you see how many times price has mitigated the resistance. So sell at resistance, buy at support until there's a breakout. That's it. Until there's a breakout. The level is even longer. I didn't even see this one set. I just say let me extend it. So it's a sell at resistance, buy at support scenario that we have now on Euro GBP. Alright. We're even coming to the end of the year. And you know what is associated with the end of the year? So many shenanigans, fake movements and all that. So this is a period where a lot of persons blow their account more often. Okay. I don't want you to be a victim of that. So please and please and please make sure that you trade wisely in this period. And this Euro CHF, we sold last week. I don't think there's any entry for us this week, because for us to make any decision now, let me take this off first. For us to make any decision now, price would have to trade into at least 50% of this whole movement, and you can see the whole movement here. So if I want to mark a POI above the premium level now, it will be number one, this key level here, which is the one at equilibrium, like this, yes. It will be this one, yeah, just that one itself. There's a fair value gap just after it. There's fair value gap after that on top. You can see the fair value gap here, right? This one. I'll cover the second one. No, okay, yeah, 4 hours. Okay, yeah. So this is what we did. We need price to trade into, displace, and what? And then we can then take a sell. Alright. So the displacement will be like this. This one most likely will touch the consequent encroachment. So maybe it drops and then bam, it displaces and then bam, we take a sell from there. Alright. So trading using confirmations, we save you a lot than blowing your account off anyhow. And I trade using a lot of confirmation. I don't joke with confirmations though. I trade using confirmations a lot because I don't want to enter trade anyhow, haphazardly. I'm really very tight with confirmations. So that's Euro CHF. Except the trade is a very swing trade, and I don't need anything like that. I just enter anyhow. As long as I'm positioned rightly over here, I just enter. So this Euro NZD, I don't really trade it that much. I just left this pair here because of people that might need it, so I just analyze everything. Alright. So for Euro NZD, the last break of structure that I can see is here. This looks so much like an incomplete business, and this is the origin of the break of structure here. So this is break of structure origin, but there's a fair value gap just waiting below to be mitigated. So you see all this level here, I think is up for discussion. So let's see 2 hours first to just conclude this discussion. Oh, beautiful. 2 hours has hit there, so price should come into that level. The 4 hour fair value, price should come into it. I expect price to like trade into it, and then when it trades into it, we'll need the confirmation. So if I don't want to trade the confirmation here, what I'm going to do is I'm just going to buy at the consequent encroachment like this. Stop loss, now you see what I'm saying now. My stop loss is not going to be here. Normally the fair value gap, right, the stop loss is supposed to be like here. My stop loss will be the second candle. I'll complete it complete. I'll just cover it completely, right? Most of the time it will end up in 3 or 4, so I don't mind. Okay, this one ends up in 5. So if I'm not going to trade using confirmations here, I just want to enter when price mitigate the fair value, I would rather allow price to mitigate that consequent encroachment of the fair value, right, and then put my stop loss down. Now this thing I'm telling you, you don't need to take my word for it, or I would like you to check your charts and see whether these things are so. Okay, check your chart and see whether these things are so, because most of the time when you enter trade using fair value gap, I'm just laughing that why are people trading this way. Okay, let me give an example. Let me not go too far. Let's not go too far. Let me find one fair value gap and show you. Okay, I see this one here. Now normally if you want to mark this fair value gap, right, this is what you're supposed to mark here. To you might think that this fair value gap did not hold, and maybe you enter this trade, your stop loss is on that first candle. This is a bearish fair value gap now, right? So your stop loss is going to be on the first candle low, right, and your entry probably at the third candle high. All right. Now when ICT teaches it, the fair value gap now, even if it goes above, like I explained it the other time, now even if it goes like way above, as long as it has not covered this whole thing here and it wicks down again inside, then you see the body close inside the fair value gap. That fair value gap was respected neat. So the same case that we have here, look at the way it went up, surpassed that whatever you marked, and then closed. It's the body that we're really after. And so what did you see? The body came back into where? The fair value itself. Alright? The fair value. So if I took this trade now, I'm going to take you like with consequent encroachment. But that's not the entry is not like my own concern. It's the stop loss. So my stop loss will usually be in that second candle, the body. I'll cover it completely. So USDCHF has given an entry. So they say we should sell USDCHF. So this is how I'm going to do it. Alright? And then take the entry. So like I said, don't take my word for it. Do your own research. Make sure that you check it if these things are so. I'm not going to deceive you, neither am I going to tell you something that doesn't work. Alright? It's out of the good of my own heart I'm even sharing them. Nobody does it. So let's see the USDCHF one, Euro NZD. Oh, is this one? Oh Jesus. Let's see. He said we should sell USDCHF. I want to be careful because we're in the Q zone and we don't want to be queued. I don't know, lines is just flowing through my mouth this morning. We don't want to be queued. Alright? Remember what I said though. Remember I said if this level doesn't hold, we are automatically just going to go to the next level, which is this POI above it. Okay? How many R is this? 6. I don't like this, so but I'm going to take it. So I'm taking the trade now. USDCHF. Add it. USDCHF sell. Stop loss is 0.79484. This is going to be disastrous if I have this as a stop loss. 0.01 stop loss entry USDCHF. Stop loss is at 79484. 794. I'm not going to see 794 again for my chart though. 79484. Okay. So there. Alright. How many should I risk here? This is 50 here. Let's do it 50. So I'm trying to determine the lot size I want to use. So with 25. Alright, done. Sell. Place stop loss ASAP. The magic no go happen. 79484. Copy it. I may take time because I'm going to take the trade in my other accounts. Okay, done. So stop loss is 79484. I've entered it here now. I'm just gonna enter it in the other account now. Let me use 33 0.33 with USDCHF. Oh, this source is load. Okay, 0.33. Sell. Stop loss. This. Which alarm is this? This means what the heck is that? Did I just see price jump? Don't jump, oh, don't go anywhere yet. Don't be moving anyhow. So that's 2 accounts. I've entered it in 2 of my accounts now. Let's go in. It's going. Alright. USD CHF, USD CHF. Problem of having many accounts. Now the thing be this, so my brothers and sisters, this is the thing, and I cannot make mistake, so I have to enter meticulously while I don't waste your time also. Alright. Okay. Paste. I just copied the stop loss value. I don't want to stress myself. I beg. I don't want to stress myself. It's 1.1 8. So I have to determine the positions that I'm going to be entering on different accounts. So it might look tedious. Well, it's the work I have collected. I telling myself now me put myself for work now. Not me say I want trade. Abi, now me talk say I want trade though. Oh, beautiful. Here is the CHF. What did I even use now? 7, 8. Okay. Paste stop loss. Okay. What is this now? I've entered it in one account. I've entered 2, 3, 4. I've not entered here. 5. Don't enter here. 5. I'm not sure I did. I'm not sure. I did not. What the heck now? What the heck is this? Alright. Here is the CHF. I think this is the last account I entered. I'll leave it in 2 other accounts. Let them stay in where they are. USD CHF. This one is 10, so 16. Let's see. 16 plus 8, 24. I did it on calculator for space. 0.24. Yeah. Okay, cool. Stop loss. I'm not even concerned with take profits. I've not set take profits in all those things. When I'm done, I will go and set the take profit. So I think I'm done. I'm not entering any. With this account is left 1, 2. No, I'll enter on this account later. So we are on this guy. Here is the CHF. So where were we? We were at EURNZD, if I'm not wrong. EURNZD. I think that one is even coming almost to the end of the pairs. Then we have ADCHF. Yes. So EURNZD, that's where we are. Okay. So EURNZD. What was I even explaining on this guy? 1 hour. How is it even in 1 hour in the first place? Okay, yeah, it has loaded out. So we're expecting to buy a buy continuation here on EURNZD. Like I said, wait for price to mitigate into the fair value gap. You want to use consequent encroachment, use it. You see what I explained for you here, right? Don't forget, use it, and what? Use it. So, but before trying to use this fair value gap stop loss of a thing, right? Make sure this one is warning. I warn you. Make sure you check it to see whether these things are so. It's not like oh, not just capping, not just the talk or something. No, make sure you check it. All right, it's very important. One thing about me is I like people that they don't just do what I see. They actually practice what I see before you start executing it in your live markets. All right. Very important. So that's for EURNZD, by the way. And moving on to the next one should be AUDJPY. Now for AUDJPY, the reason why I don't think this guy is going to buy now is because number one, this is what I'm seeing here. Okay. Now there's only going to be a little problem. Let me explain. So this is an internal structure. And this internal structure is forming this way because of this gap. This is an external structure here. Meaning, this new high that has been formed might just be the new external structure high. We don't know yet. But so this is what we're going to do. We're going to mark two levels. If price goes above this high that has been marked, consider the sell done on AUDJPY. I repeat, once you see price just go above, oh god, my hand is pinning me. Once you see price go above this high, consider the sale done. Alright, second scenario now is price has just mitigated if another block, I think in 4 hours and in 2 hours, and so it will lead this trend line to become trend line liquidity. What's this one now? Give me back my ED. It will lead it to look like a trend line liquidity, like look like a fake out. Let me use that word, a fake out. So in 4, I don't really like using 4 hours POI. I prefer using 2 hours. So in 2 hours, right, this is it. So you can see the last buy candle here as the bearish OB, and price has mitigated it. Okay, so what will be our next course of action? I can see that a displacement has occurred already also, so I'm just going to get rid of the trend line itself. Laptop I want to buy now. The next laptop I want to buy, I'm checking the price is like 1.5 million naira. 1.5. You people should gather money. I'm just you people should better gather money. 1.5 million naira. All these things I'm doing, I don't see any support. Let me just be ranting like this. How much am I even subscribing now? Every month I'm not subscribing almost 50,000 naira every month. Waiting happen. Now maybe Dangote. Alright, so this is the mitigation here. This is the displacement. So you see this displacement here, bar. So if price comes down to like the 50%, and that would be a good place to sell from. Okay, that would be a very good place to sell from. Okay, alright. So on AUDJPY, for those of you that trade AUDJPY, I have just marked a very important level to sell from. Okay, now let's check how our target is going to be like. Target is like very important though. Is important here. My system is lagging because I am streaming on multiple platforms, and the power of the system is strong. If I buy system 500k, you buy system 500k finish, the system will not serve you. Whoa, whoa. Yoruba say osumi, osumi. Okay, so this is it. How many? No, it's too much. Bros, don't worry, you're giving me too much of a target. Don't worry, give me 5. It's okay. Thank you. You see, I'm not used to start stop loss. It's not my fault. Nobody should blame me. I don't really care about the reward. I care about my own risks, what I can manage. Alright. So I've decided on the trade. So this is how it's going to be, right? On AUDJPY, once, like I said, once that high has been taken off, it is no longer valid. Then the buy will come in. So for now, entry is going to be a sell continuation entry is going to be at 98.243. I repeat, 98.243. That's where the entry is going to be at. That's where the continuation rather is going to be at. So take notes, do your best and take note of that. Alright, so that's AUDJPY. Then the next one is NZD card. Now I gave us, we bought this one last week, right? We bought it last week. I hope you bought. So it's not that I'm explaining something for you and we're taking it live together and you're not taking them. Some of you, they need to beat you. One funny thing happened. Somebody said I was in your live stream. I did not know that you used to do live stream, but I was in your live stream. I saw you take a sale on AUD NZD. For me, I wanted to take it buy, so I took it buy, and I hit stop loss. please, can I be taking your trade? I say, what? See, any trade you are taking on my own platform, I'm not forcing anybody, because at the end of the day, right, you can have your buyers and I have my buyers. I can hit stop loss too. I can hit stop. This is the truth now. I hit stop loss too. You see it here. Last week, how many stop losses we have? We hit stop loss. There's no need to keep anything. So this NZD card, right? NZD card. What I'm seeing is already clear. I think you can see it already. There's a sweep of liquidity here, and a shift of structure here, right? And this level is liquidity pool. When I'm talking about liquidity pool, the low to sweep there is just obvious. It's too obvious, in fact. And this is an OB just resting below the liquidity pool. So you already know what I'm talking about. Alright? Just mitigation, and then boom, it goes. And up it goes. That's what I'm thinking here. You see, it doesn't take time. Once you've mastered price a bit, it doesn't take time. So that's what I'll be expecting on that guy. If he does that, I'm going to buy. Now for NZD-CHF, price is bearish, right? So let's go to the 2-hour time frame and mark the OB. And this one, if you didn't take this sell also, I was just say on your own, because last week too I told you once price breaks out, you should do what? You should what? Sell. So price broke out from that range last week, and it came exactly at the point where I told you, which is the OB here. So if you took the sell, you made money. But if you not take the sell, no problem. I still got you. I got you. No worry. So this level will now be where we're looking at, because this is a key level that we're going to be watching what price wants to do. Alright. So if price trades into this level and it does a shift, okay, so it trades into this level and then you see something like a shift there, like something like this, a shift in this level, alright, then you can trade it downwards. But if it doesn't do any shift and then it trades back into the OB that we have here, then this is where we're going to take a sell from. But for now, it is still a sell trade. Do you understand? Alright, you understand. See these guys, you're asking me how much is the laptop. His laptop is 1.5 million. You think I'm joking? It's 1.5 million naira. You want to give me money? Why you asking me? This man, don't whine me. This money, no, see, my body the hot. So this is AUD-CAD. For AUD-CAD bar, price did this. This is the reason why we took that sell last week. Okay, let me break it down for you. We saw that price made 2 break of structures, and I told you that price is supposed to cover the gap. You can see this gap. Now I've always told you something. That I've said that it is not every time that price sweep liquidity. If you've been following me, you've heard that countlessly. That price doesn't need to sweep liquidity all the time. That the movement of price determines to the great extent what price wants to do. And I gave you a scenario, and that's why I said always check these things. I'm not just talking, I'm telling you to check it, alright? And I said the break of structure, after a break of structure, you want to check how price reacted after, not before. After the break of structure, there's a lot of stories that it tells me. So after a break of structure, if price closes with a gap, there's an imbalance after the break of structure. I would not be looking for a liquidity sweep on that kind of price action. Why? Because the only thing that is left for me is to wait for price to rebalance that imbalance. That's just it. I get it now. So I'll give an example. I'll give you a clear example, right? So this first one here, you see price breaking structure this way, right? Looking at this one, I know that price is going to sweep liquidity. Why? Because after this break of structure, usually I stay in the higher time frame. So after the break of structure here, this price is choppy. You can check my page. I wrote a trade about on it, I think a year ago. That was last year, so you can check it. So when you see that the break of structure, after the break of structure, price action is choppy, or it looks like a sweep, something like this. Maybe it broke below, and then maybe it's choppy like this, is moving ahead, or it just came down and then reversed immediately back inside. Eventually it will lead to a sweep of liquidity. But when you see the break of structure like this, and then it just goes with a gap, right? That kind of price action do not really need stop what's called now liquidity to be swept. Now this one is choppy. If you're going to go to lower time frame, let's say you go to like 1 hour, you will see what I'm talking about there. All those price action there is choppy. You see this whole move after the break of structure is choppy. I mean, I just expect that price to sweep liquidity and then continue, and that's what happened. And so last week when we took this sell, it was like 5 hour. It was more than 5 hour, by the way. But I only just extended, stop loss. You know what, I've been doing it since here, so you've seen it. So as price broke this structure, what do you see? It closed with a gap. This is not choppy. This is not like a sweep. It closed with a what? A gap, an imbalance. So what was my own job? Position myself to take the trade on the key level, which is here. You call this one the mitigation block, right? So when price mitigated it, we took the sell 2 times, by the way. The first sell was here. I think it's still there now. Yes, the first sell was here when price gave us that confirmation. We sold the first one here and made 5 hour from it. This was the second sell. The second sell was when price now traded into the key level properly and then took the sell. Alright, so traded last week. And so for this week, this is what I'm expecting, because beautiful. You know why this is beautiful? Because what I'm just explaining is what is happening again. Now this break of structure, does it have a gap? No. The break of structure, what is it? It's a sweep. Price just broke it and then went back up. So what do you expect, or what are you expecting? That price should sweep liquidity. Simple. So when I'm reading price, honestly speaking, those are what I do. I'm just telling everybody my secret. But the point is, it's not everybody that will really, put them to work. That's not the problem. You understand? That's the problem. But this is already looking like a double top. It's not what it's looking like. It is a double top. And when I see them as, some people see them as, this is a very good reversal candle. I see them as liquidity pool. That's the only thing I'm seeing them as. I see them as liquidity pool. You get? So I'm going to mark it also out as levels where I'm going to be watching if price is going to, because I'm expecting a sweep of liquidity, obviously. So price is supposed to sweep liquidity before a continuation. Alright? And is there a POI for me to see? There is. Just look at this. There's a fair value gap here. I'll cover the second candle completely, right? So there's fair value gap just resting above. So if price eventually ends up sweeping liquidity, then this would be a level that I might want to be looking for toward taking a sell continuation on AUDCAD. I really like AUDCAD. I trade it a lot because the movement are usually clean. It's not like the one that has CHF inside. Those card CHF, I don't like card CHF. This one also was one of the trades that we took. Okay, it was not long, it was just short. AUDCHF, we took the sell on AUDCHF. Now from what I've just explained to you again, based on that break of structure, right? Take a look at what happened here. This is the break of structure. After the break of structure, did price close with a gap? Yes. Is price choppy? No. Does it look like a sweep? No. It closed with a gap, an imbalance. Alright. When it does that, I said price does not need to do what? Price doesn't need to sweep liquidity. It only just needs to rebalance that imbalance, and then that's it. And so what do you see here? Price breaks it, it comes back. It doesn't need to sweep liquidity. It just taps into the POI there and then displays it. Again, don't take my word for it. Make sure you check whether these things are so. Check it. Make sure you check it. So for now, the present price action, there's an unmitigated POI here and another one above here. But the reason why I'm not going to mark the one above is because if price gets there, then the sell has been displaced and they were now looking forward to be buying now. So this POI becomes my invalidation point for a sell continuation on AUDCHF. Alright, okay, so we're already almost wrapping up. I think AUD is like the last pairs. Okay, and this is AUDNZD. Beautiful, another beautiful price action I'm talking about, right? See the last break of structure here. The way the break of structure closed, is it a sweep or choppy? It is. And so it is a sweep. So what do you expect price should do? Expect price to what? Sweep liquidity. And this is it here. So it's not like I'm telling you the things that I just did by talk. I'm not the by talk. Oh. I'm just telling you what I've been trading for a long time and what I've noticed. Again, I'm not scared of sharing it because I know not everyone practices them. But those ones that are smart, you will practice it. Alright? So the sweep of liquidity has occurred already. A sell is supposed to continue because price is actually responding from a fair value gap in the higher time frame. Let's confirm the higher time frame price is responding from first. Is it 5 hours? Because I know this is an higher time frame gap. Until I see it, you shall have no peace. You know what showed me? This is 6 hours, 7 hours. It's in 7 hours. I think it's 8 hours though. I think it's 8 hours. It's 8 hours. It's 8 hours gap. I know. So price is actually responding from a fair value gap right now. So the shift, I trade AD and ZD a lot, so that's why. So look at this now. This is the mitigation of the POI. Here, this is where I'm expecting a shift. Alright, so until price displaces this low, I would not be looking forward to sell. Alright, and even after displacing the low, right, the entry level will be what, 50%, because of what I told you already. There are normal and abnormal level. This is an abnormal one. Okay, I have shared a lot of things I didn't plan to share today, a lot, but I've shared a lot. I only hope for those ones that still find technical analysis a bit confusing, I hope you just gain maybe full clarity. Alright, so that's AD and ZD, and then we have CAD JPY. Like, you know, I have all for those CAD JPY trades now that we've been analyzing since. We've been expecting most of them to be bearish, right? And so this one has actually filled the gap, right? It has filled the gap below, and I'm expecting a sell continuation to happen. Now if price is going to go above, see this level that I've marked here, if price is going to go above it, then I'm not going to be looking for a sell anymore. I'll start looking for a buy. Alright, I'll start looking for a buy. Now I would have taken these sales, but they happened in the midnight. I was asleep. I was fast asleep in the midnight. Asian session, how did they call it? Asian session has made many people turn to night worker. So you see the break of structure here, this whole movement, price was choppy here, price had to sweep liquidity, and then it's coming back. So if you look at it, I've marked the entry already. The entry is exactly at 50%. I think by now you should know why it is, because the displacement is an abnormal displacement. I'm only putting this here so you see it for clarity's sake. So I'm not just talking, right? So you see it. So 50%, when price trades back into that level, I'm going to take a sell, and I'm going to hold that sell longer. Now in fact, this one, for this AD CAD and JPY, I'm going to hold the sell long. And I mean long, I'll be holding to around 105.199. 105.199. So when I get a sell from there, I'll be holding for a long time. Alright, so I hope you catch it also with me. Alright, I think the last one here will be CAD CHF. So for CAD CHF, I don't have any analysis on it though. I don't like it. I already said it before we even got here. I told you I don't like CAD CHF. I only keep it here because of you guys. So when price comes into this POI, anything I want to do, you should do. But if it comes into this POI, we're going to investigate. We'll check what price wants to do. Because even if I don't like it, we see used to catch trade. I think we took a sell from here downwards. We took a 5-hour trade from here. See, I think the tools that we use is still there. Safe. Let me see. Yeah, look at it. It's still showing there. Yeah, it's still showing there. So we took a sell from here last week. It was 5 hour. I think the TP, the reward was close to 7 at the 8. But I adjusted my stop loss. It's not me that anything with stress. And this one is, let me show you. This one was normal level. What do I mean? Okay, see this now. This was the mitigation here. Here was the mitigation, alright? So this was the mitigation. Now if you look at it, I told you normal level I used 23.6%. okay, so when price mitigated, I was waiting for displacement. This is where displacement occurred. So using Fibonacci, you see that this is normal, right? You see the sweep, you see the high, not long, like the ones you've been seeing since. So price came into 23.6. You see, that's where my entry is, and then I had to take the sell. So the sell was giving close to, it was more than 10 hours, safe. More than 10 hours. I adjusted the stop loss. Let me have peace of mind. Somebody will say, but you would have capitalized on it and made a lot of money. No problem. My psychology is not ready for that. My psychology is only for big stop loss. I want my stop loss to breathe. Alright, so that's for CAD CHF. Then for BTC, I'm expecting to sell I'm expecting to sell Bitcoin. I've not seen any confirmation to buy yet, but this was last week price action. Last week analysis. So let me see something else. Let's see this. Let's draw this one out, because this one is going to guide us. So if price is going to come off this level, then we're going to be looking at buying Bitcoin. But for now, I'm still going to be bearish on BTC USD. On the Bitcoin, I'll be bearish on it. So I'm expecting price like trade into this level. So this one will be, see the break of structure now, right? The break of structure does not have a gap. This is a sweep scenario. And what did I tell you? You should sweep liquidity. That's it. You should sweep liquidity. Okay? Again, don't take my word for it. Check it. If these things I'm saying, if they are so. I think I should go to my page and look for that original tweet. I don't know, but I think I should. Let me check it. I tweeted it a long time ago, and I've been deleting some posts though. I was trying to delete all my tweets, but no, I don't know. Twitter did not allow me. It's not possible. I have to use a third party app, and I'm not a fan of that, so I just left it alone. Type of movement, market movement. Hey God, I don't know the name I want to use to search it again now. But if someone can search it, please search it and then just quote it so that I see it. But if I see it, I'm going to just I'll just retweet it. Okay, I'll just retweet it. I think one of the things I use there is movement. There are two types of movement, something like that. I think so. I don't know. Or two kind of trend. I think it's trend. Let's see. Oh, trend. It's not bringing it out. It's not bringing it out. It's not bringing it out. But I know it's there though. So one of you can find it for me and bring it out for me. Precious Jesus, oh my Savior. I'm not seeing it yet though. So I think one of you should find it now. One of you should find it. When you see it, just retweet it for me, and you see it, retweet it for me, right? And I will bring it back up. I don't know if I'm even seeing it though. Hey, I've seen it. I think this is it. Yeah, I've seen it. So I'm retweeting it now. It was posted on the 17th of December, 8:06 a.m. I've retweeted it, so you can check my page now. It's going to be the second thing you see after the pin post, where you see with every trend has two type of movement. So you just go into the other stuff that are below. Yeah, you'll be able to see the full details of everything. Alright, okay, we're moving on. The train is moving on. We're moving on. So Bitcoin, like I told you, this is where I'm going to be selling from. Let me just set the alert. I'm feeling hungry. So for the first time, guys, for the first time in almost a month, I'm waking up today and I'm not going to take medicine. Guy, I've been swallowing medicine. Jesus, I've been swallowing medicine for the past 1 month. All the medicines, I've done them. Now me know everything I go through, sha. Just imagine going through all of this and still coming up for you guys. People supposed to be telling me you love me every 2 seconds. Alright, so this Bitcoin though, we're going to sell from there, and if there is no displacement or no entry, We're just gonna leave it alone and let it break out, and then we'll ride the buy. Okay. So anything the market wants to do, if it's sell, we will ride it. If it's buy, we will ride it. The main point is we're going to manage our risk. Okay. Okay. Think this is the XY. This is the XY. Meaning EURUSD pulled back. Yeah. So most of them have pulled back. Oh, wonderful. EURUSD is at entry. You are interested in buying, buy. EURUSD is at entry. Let's see GBP. Did GBP USD come back to entry? Oh, it came close. It came. Funny thing is, I told you, I gave us a re-entry. So it came back to that re-entry level, exactly on the re-entry level. This is it, right? Exactly on that re-entry. This is fair value here now. So it's there now. So if you want to take the buy, you are good to go, my bro. You are good to go. Okay, good to go, sir. When we're in camp, NYSC. You don't think most people that even hear my voice now, do you know the funny thing? They'd be like, this guy is so young, I don't know that our last born in the house, my junior brother is going to be, he's already 25. My junior sister is 20, it is 1998 now. I don't even know, 20 something, 1998. And I seen her with 2 years. And my voice sounds like the last born in the house. It's so wonderful. So God does not want to tag us along. Okay, no problem. But when it comes, we're going to enter. So let's check the fundamentals for the week. Okay? The fundamentals for the week. Wait, there's a trade I took here. Where is it? I took it to buy on V75 or it will see me. I'm not online. This trade has gone. Well, but it's close to TP to still go back up. So for fundamentals for the week, let's see. Today is Monday. There's nothing there. CPI NZD. When did this happen? Okay, that's the reason why NZD moved. Just imagine that the thing opened with a gap, just the way JPY used to do. Rubbish. Accounts would have blown again. That's my 100k account that I lost last week. Just imagine you're terribly sick, you're going through a lot, you're losing 100k accounts. A lot happened though. A lot happened in October, and October was not my birthday. A lot happened, but I give God all the glory. I overcame. So today, Monday, no news as usual. Tuesday, tomorrow, we're gonna have card news by 1:30 p.m. tomorrow. CPI, crazy news on card. Then on Wednesday, we're going to be having GBP news, same CPI, that's Consumer Price Index. Okay, on Wednesday. On Thursday, there's no news. On Friday again before the news. So the news for this week is just Tuesday, Wednesday, and Friday. I repeat, Tuesday, Wednesday, and Friday. On Friday, we now have Euro news, GBP news. I'm not really going to look at USD news. All of them are going to be tentative. Why? Because the government is still on the shutdown, and as a result of that, they're not going to be revealing or putting out those things. They are all tentative, so everything could just disappear. You see, we've not seen NFP for last month and all those things, right? The government is still on shutdown, and it's so crazy why the government is on shutdown. But we've already spent a lot of time here, and I think we've enjoyed ourselves. And so it's time to move. It's time to go. All right. It's a new week. One thing I can tell you for sure is, don't behave like a dicey cow this week. Don't carry the baggage, if there's anything like that, from last week into this new week. What do I mean? Last week we made some mistakes. I think I made some mistakes last week too. I think there's one account I was supposed to use a particular risk I didn't use. I used more than it. This was to tell you that you're not above making mistakes, but don't be subject to those mistakes. You make a mistake is once, doing it again is an habit. Alright? So in this week, make sure that you do not make any decision without working with a plan. I posted it yesterday night. I said the market is open now. Don't you dare trade this week without planning everything. Plan everything how? From your risks per trade to the instruments that you trade. Everything that you're going to trade this week, plan it. It's not that during market sessions like this, you just want to go and analyze. Don't do it. before you open that your MT5 to take any executions or any platforms that you use to trade, right? Make sure that you've planned everything, so that you're not going to be acting from how would I put it now? You just be acting haphazardly, anyhow, anywhere belief is. Don't try it. You understand? If I catch you, comment, I will slap you. Yeah, I'll say I will slap you. I just used to do that. I'm very funny, but I can be very strict too. I will slap you. Yeah? So don't try it, alright? Very important. It's very important thing I'm telling you. I don't joke with people that are indisciplined. I don't like it. I hate indiscipline so much. Alright? So, and I understand that all of us are work in progress. That's also the truth. Everybody is a work in progress. So whether you are at this level 80%, whether you are at the level of 60%, whatever level that you are presently on, you are a work in progress. So trading this week, don't feel like you've arrived. Are you getting me now? Don't feel like you've arrived, that oh more you don't arrive, or this one. Don't even try it, okay? Because the market can always do what it wants to do. Your job is to do what? Your job is to manage your risk. Manage your risk. Remember, when we talk about a trading edge, what a trading edge means is you have a shield and you have a sword. The shield is to protect you, which is your risk management. Your sword is what? The advantage, which is your edge, your system that you can use to take profit from the market. Alright? So protect yourself. Okay, protect yourself. Very important. Very important. So I cannot end this session without saying this. If you've not made your morning prayers, you've not prayed about the new week, make sure you commit the new week to God's hands. Commit your day to God's hands. So anything, objective, your plan, everything, just talk to God. Thank God about the new week. That your new week is going to be fruitful, is going to be productive, and is going to be blessed. Alright? So irrespective of how the week goes, just go ahead and thank God, yes? So thank God, commit the day to God's hand, commit the week to God's hand. And I wish, to a great extent, and I pray that to a great extent, that at the end of this week, all of us will come back with testimonies. That you will pass your proper accounts, you doubled your accounts, you're able to achieve objectives that you were able to achieve from January to this present time. You do them in this week. Just continue following your plan. Alright? So I'll see you on the next one. The next time is going to be on Wednesday, same time, 6:30 a.m. We're going to meet again. Alright? So take care of yourself, and bye for now. If you have any questions and any inquiries, make sure you send me a DM. Alright? And I'll see you. Oh yes, you want to buy me laptop? Send me DM. Buy me the laptop. I'll collect the money. Alright, so bye for now. You guys should take care of yourself. Wow, how much is this account running now? $700 profit. Okay, I'll close it later. Let it run.